Hello, YouTube. The stage is set for the S&P to either advance to about 430 or to decline to about 350. So we want to ask ourselves whether or not this is going to be a new bull market or if this is going to be a bear market rally where we're just going to fade back down to our low. And this is important because now, after spending 2 weeks below our 50 moving average, we closed above by less than 10 cents. But this is the exact same clue that we saw on QQQ before we started to birth a new bull market by getting above 305. We know we had a push pull happening off the 50 MA. We closed one massive bullish engulfing pattern, candle, and then we advance and we have a increase in bull volume. So an increase in price with an increase in volume is usually a bullish signal. But I would not say that it is all systems go. So we have that same volume wrap here. We're back above the 50. I'm going to show you one more chart, and then we're going to dive in and try to understand the story a little bit better. Here we're looking at RSP, which is going to be equal weight S&P 500, and we have a second back-to-back doji. A doji just means that we're opening and closing at about the same price, but we made progress to the upside and we made progress to the downside this week. That is obvious by just looking at the wicks here. So what exactly is driving the market and how can we be best prepared? Because whether you recognize it or not, we're going to be closing out three important different time frames on Friday, March 31st. We're going to be closing out the weekly, the monthly, and the quarterly pattern. So we have to make sure we are also aware of what's been happening on the monthly chart because we've gone a whole bunch of nowhere. We opened the month at 395.41 and we are currently at 395.75, which means it's within like cents of where we started. So let's jump in and see exactly what's driving this. So we still have a lot of fear in the system. We had a move back up to close to neutral, right back down into fear. And this is so interesting because last weekend we talked about how the pain trade is here and whether or not people were real. Well, we can note that short sellers only reduced their position by about 7,000 contracts, which means this is incredibly painful for them. It's incredibly painful because of specific levels. Here we're looking at ES, which is that same graph we just looked at. We're looking back to the period where they went net short. And we note that once we get above 40.20, that is where there's a lot less supply and we can meld higher to about 40.50. What was the progress we made this week on ES? Well, we had a high of 40.73 or the upper end of our downtrend, which means this has been very painful for short sellers. They might be right. The question is whether or not the market's going to remain irrational longer than they can remain solvent. We have competing headlines here too. This one's from Powell. Powell's own guide to recession shows rate cuts are coming versus Goldman Sachs, which was expecting a pause at their last meeting, is now expecting 2 additional 25 basis point rate hikes in both May and June. So this is likely going to drive a large part of the sentiment and price action into the next month or so before we have the next Fed meeting. So let's listen to what Jerome Powell said about a year ago. We're talking here about Powell's curves as recession is confirmed. That's what we talked about, I believe, on Thursday when we uploaded the video. And here is a quote from Jerome. Frankly, there's a good research by staff at the Federal Reserve System that really says to look at the first 18 months of the yield curve. That's really what has a 100% explanatory power of the yield curve. It makes sense because if it's inverted, it means the Fed's going to cut, which means the economy is weak. So what Jerome Powell said a year ago versus what he's saying now, and then what we have with the Goldman Sachs saying that an additional 25 basis point at next 2 meetings is their base case. This is where we're getting a fundamental disconnect between what the market is pricing, currently 4%, and 5% from the Fed. So we're going to have to pay very close attention to the next couple of months because we just had the SEP, or the Summary of Economic Projections, which you can find on this link. And we have a meeting coming up on May 3rd, and then another one on June 14. And again, the June 14 one here has an asterisk, which means this is a meeting associated with the Summary of Economic Projections, or that SEP. In addition, there's a couple of key Fed officials speaking this week. On Monday, we have Jefferson, but I'm focusing here on Tuesday when we have Vice Chair of Supervision Michael Barr giving congressional testimony in front of the Senate Banking, Housing, and Urban Affairs Committee on both Tuesday and on Wednesday. So this will be similar grilling to what Jerome Powell had to face. And as we all know, he is the person who people have a lot of questions for. And then on Friday, we also have Governor Cook and Governor Waller speaking. In addition, we also have some key economic data coming out this week. So as we look forward here, we got consumer confidence. That's important, but it's not as important. We have a revision to the GDP print for Q4. Here I'm focused on CPI coming out of Europe on Friday, and I'm also focused on core PCE coming out of America. So we're going to be going from 8.5 down to 7. That looks pretty constructive for Europe. And then we look here to the US where we have core PCE, or the Fed's favorite inflation gauge, going from 0.6 down to 0.4. And I believe the market would cheer this because we went back up to 0.6 here, and coming back down closer to 0.4 is just going to mean that maybe we're going to start a trend of actually seeing those lower highs and then also lower lows. So if we think about all of this stuff and we think about exactly where the market's likely going to go, we have to think about what could happen in the first half of the week versus the second half of the week. So let's pretend that they grill Vice Chair Barr. I think that's going to happen. I think, again, I don't know, I think that could cause a little bit of a sell-off into the first half of the week. Maybe there's some banking fears out of Europe. We note there was the Deutsche Bank crisis this week. And then into the second half of the week, maybe we can start making progress higher, where that core PCE number is going to give us a nice little bump. Why would that bump matter? Well, again, as I just noted, we're closing out the weekly chart on Friday. We're closing out the monthly chart on Friday. And we're also closing out the 3-month candle on Friday. So if the pain trade is up, would it not make sense to repeat what we saw on Friday? Because let's look here to the E-mini futures and just have a look at the closing session. Because as you might have remembered, I was looking for a triple cut and a bounce. So if we note here, melting into the close after that CFTC positioning is updated, it just means people know there's pain. So we're just going to give a quick update to the pattern we were looking at, I believe, on Wednesday, where we have we have how many cuts here? So we're looking for, right, 1, 2, 3. And then over here, we have our 1, 2, 3. We started our immediate reversal. So on the lowest low, we got 1, 2, 3, 1, 2, 3. On our lowest low, we start to get those nice lower wicks, and then we start to melt higher. And what's interesting is that as we look at the short-term pattern, we went through this live on the stream on Friday. We have our cup and handle. We hit that first area. Same thing happened here, cup and handle. We back tested, and then we just advance. A little bit of a pop, a flag, and then pop. So we could do that in the first half of the week or the second half of the week. I'm not entirely sure, but if this is going to materialize, we should make it to not only the high that we established at 40.40 or what happened just before the FOMC, we should also make a new high. So if we're going to be closing out with a new high, that would imply a high of the week close, a move closer to the high of the month, and that could be constructive for the bulls. So now we're going to quickly look at a few charts to try to get an understanding of what the market's doing here. So we're going to flip to weekly candles, and then we're also going to look at monthly candles. We're also going to flip to hollow, so please just bear with me because I think it's important to try to understand whether we're in expansionary territory or if we're actually fading. So the S&P closing higher here on the weekly. Moving to QQQ, higher high, higher low, closing over last week's high. That's expansionary. We got bullish volume to confirm it. That looks pretty bullish to me. We look here to the dollar, down, but with a hammer. Okay, so dip buyers came in, but it's closing red. The VIX, huge range of roughly 25% from low to high, but it is closing out by down by about 15%. So that tells me that people are less scared on Friday than they were earlier in the week. Want to have a quick look here at gold too, just because it's been impressive. It's battling for 2,000 right now, and it's also above the 2011 all-time high at 1923. As we flip down here to some ETFs, I want to look here to RSP, which just shows us that we're not doing anything. We're flat. We got a doji. So the equal weight S&P 500 over the previous month, or when we look here to the, this is for the weekly chart. So let's go here to weekly, and we note that, okay, yeah, well, like the technology, cool, right? We got NASDAQ against the world, but there's big red in financials, and all said and done, it's not really doing very much. So on the weekly chart here, it's like, okay, not doing all that much. New York Stock Exchange, which is 2,000 stocks, is actually more bullish than equal weight S&P 500. The Dow, it's closing up, but it's not above last week's high. It looks similar to the S&P. We look here to IWM, or 2,000 small cap companies, and we have that same thing we noted on RSP, which is a doji. We have a death cross forming, and we're struggling to hold on to 2018 and 2020 all-time highs. That's not a good look for me. We move forward here to XLK. It's bullish. It's just like QQQ. We look here to XLF. It looks very similar this week. We have a doji. So again, remembering the market, meaning the S&P, is 500 stocks collectively, and this block here is pretty red. All right, moving forward, here we have XLV, which is expanding. So people are moving back into defensive things like healthcare. We can also note that XLE is a little bit higher by about 1% here, adding some fuel to the S&P. Utilities down marginally by about not marginally, down 2%, closing right around its 200 weekly moving average. And then finally, here we got SMH. Looks very similar to QQQ or Tech because it has a higher high, a higher low, and it closed marginally above last week's high, which means expansionary territory. ARC, stinky. Moving here to the DAX. DAX is where there's a lot of concern right now, including Deutsche Bank. It did close higher by about 1.3%. FXI closed up. Emerging markets closed up right around its 50 MA. And that is pretty much the end of the, two more here. We got IAT and IAQ. So this is going to be regional banks. And I believe that when we're going to say there's an all clear is when this chart starts to advance above about 40. Why? It needs to start forming higher highs and higher lows. Otherwise, there's a lot of sell volume here, which usually self-manifests to lower lows. We look back to the last time there was bouts of selling, and what happened? Well, the chart went down, down, down. So why would this time be different? I don't know. And looking to IAK, which is a insurance ETF, we're also noticing that big doji pattern. All right, so now that we're going to be closing out the 1 month chart, I also want to pay attention to these monthly charts for those exact same, the monthly pattern for those exact same charts. Let's look here to a 1 month pattern. Let me just make sure I'm on the right board. I am. And now we note that, okay, well, S&P has done a whole bunch of nothing in the last month. It's basically flat. Okay, QQQ is in advanced mode. QQQ is currently advancing. And sorry for the drawings on there. That's a pattern I'm watching for. That's Psychology 1. So QQQ, nice move here, right? It's up. It's up by about 6% on the month. That is a powerful move. We're going to look forward to a few more charts now. And then just bear with me because we're also going to look at a visual here where we're going to look at the last 1 month to see, oh, okay, well, we have to pretty much understand that if we look at RSP, equal weight, S&P 500 in the last month, it's not looking hot. It's down 5%. So when we look to a chart like RSP versus if we look at a heat map, we can get a different story. So yeah, if you look here, most blocks are red. So equal weight, which means each block has an equal representation versus a weighted. Weighted means the bigger the block, the more weighting for the market. We're down by 5.5. That's not pretty. Nope, that's not pretty. So it's nice that we got tech rallying like Apple, Nvidia, Microsoft, Google. But if other sectors don't start to join, we're likely going to have a disconnect, which means I don't think the NASDAQ can rally on its own. We need to see some participation. New York Stock Exchange down by 4, coming back down to its 50 monthly. Moving here to the Dow, it's down by 1%. Still a bullish pattern, though. Looking to the Russell, down by nearly 9%. And again, testing those 2018 and 2020 all-time highs. Tech, again, that's XLK. Moving forward to energy, down by 13%. So this is already given a recessionary indicator, as we noted with Jerome Powell's commentary, because people need less energy when we're going into recession. It's also battling for its 50 monthly here. Moving forward to healthcare, basically flat. Moving forward here to energy. Sorry, was that financials earlier? Yeah, I think that was financials. Sorry. So that was financials. XLF. So financials, as you would imagine, are bearish. Sorry. Just scratch out that. Again, we know the banks are under pressure here. That F and that E look similar to me. XLE, same notes as before for XLF. So we got it down by about 7%. And it's looking like it's just back testing about 2018 highs here as well, just like IWM. XLU, not really doing all that much. Right here on the 50 MA, marginally higher. Utilities are usually a safe haven too. Tech is actually green and starting to invalidate that bearish pattern. We look at ARC, it's red. We look at the DAX, it's red. We look forward here to China, green by 3%, failed breakdown. EEM up by 1%, failed breakdown. And then we got IAT, or that regional banks, down by 32%. And then we have the insurance sector down by about 13. So make this simple for me, Justin, because I listened to what you said, but I'm still a little bit confused. All right, let's do it. So here's what I'll be looking for as we go into a new month. And let's delete everything here for a moment because there's one pattern I've been paying very close attention to. It's QQQ. So as we go into our monthly close, I want to watch and see whether or not we are above or below 315. And 315 is so important because it is the 2020 all-time high. Sorry, the 2020 high. 31469. Our high so far in 2023 is 31523, which means we made an advance. The bulls advanced, and then it retraced, or the bears defended and knocked it back. So if we can open up a new month and get above 315, we can actually suck up even higher and do a bigger move. So if the NASDAQ is currently the only game in town which is working consistently on the weekly, so we look to the weekly chart, weekly heat map, bullish. Look to the monthly, bullish. We look to the year to date, bullish. And remember, we're closing out the weekly, the monthly, and the quarterly on Friday. So if the NASDAQ starts to stall out by not getting above 315, yes, it is in bull market territory by being above 305, as we reviewed last weekend. But the problem is that the market is 500 stocks, not 5. So we have to see participation from other sectors. So that's really what it's going to come down to this week. I don't want to overcomplicate it, so I'm going to leave it for you there. And if you want to have more commentary, there should now be a video queued up here on the left-hand side where we went through the pain trade being higher and whether or not you were ready for it. If not, I very much appreciate your support, and I look forward to seeing you next weekend. Thanks.